Hello traders, thank you for joining me on today's episode. My name is KiraForex. Our topic for today is order blocks. So what we are going to talk about today is what is order block, types of order block, bullish order blocks, and bearish order blocks. One may ask, what is an order blocks? Order blocks are areas where institutions are either buying or selling from. These blocks are formed prior to a large impulsive to an already pre-planned direction. The reason we trade order blocks is because for the institutions to make a move, they need to grab liquidity first. This is from retail traders' stop losses, where many retail traders call it stop hands. So institutions drive price to grab this before creating their desired move. Institutions do not use stop losses, which means although they have moved the market how they would like, they still have a trade going the opposite way in heavy drawdown. So they drive price back down to mitigate their orders, then continue the move. This is where we come in with our strategy. We look to enter at this mitigation and follow price with them. Generally, when drawing supply and demand zone, I look at the last order block before a break of structure, meaning that where my order block is where my supply or demand zone exists. And in general, I can call this point of interest or area of interest. So what then is a supply? Supply refers to selling price. So a supply zone is essentially a zone where you are looking to sell price at. And demand refers to a buying price. So a demand zone is essentially a zone where you are looking to buy price at. So generally, an order block simply refers to the last opposite candles formed after an aggressive move that led to a break of market structure. Alright, so when I was explaining, what I said was that an order block is the last candle that was formed before an explosive move which has broken a structure, or the last candle that was formed before an aggressive move to either the upside or the downside that has broken a structure. So this diagram we are looking at this point is a bullish order block. Like I said, we have two types of order blocks. We have the bullish order block and we also have the bearish order block. What is the bullish order block? The bullish order block is the last bearish sell candle before the impulsive move. So this is the last sell candle before this move, before the explosive move. A lot of people term this area as the order block, but the thing itself, what the order block itself is the last candle that was formed before an explosive move that has broken a structure. So in a bullish order block, the last sell candle that was formed before the explosive move to the upside is what we term the bullish order block. Now when this happens, we draw our demand zone around this area. This will also be another topic I'll be treating. So when we are able to identify the bullish order block, then we draw our demand zone. We wait for price to come back in a compressive movement into that zone, then we buy from there. So you can see that we have the bullish order block here that has broken a structure, the explosive move that has broken a structure. So we have the BOS here, the bullish order block here. Then we also have the compression movement of price back to the zone. So I will now term this place as my demand zone because I'll be looking at buying from this point. So immediately price gets there and the banks are beginning to take their second order, then I will also buy from this point. So that is that for the bullish order block. Now let's move to what the bearish order block. So if this is the bullish order block, then it means that it will be the opposite for the bearish order block. Take note, when drawing a bullish order block, you consider the whole body and the wicks. That is how we draw a bullish order block. You consider the whole body and the wick. When you consider the whole body and the wick and it becomes too big and you realize that your risk will be too big, then you have to refine the zone, which will also be another topic I'll be treating another day. In a bearish order block, the last candle that was formed before, the last green candle that was formed before the bearish move, the explosive move to the downside, causing a break of structure, is what we term the bearish order block. So this is the bearish order block that has caused what the aggressive movement towards the downside, or the impulsive bearish move to the downside, breaking structure. And then anytime this happens, they leave something behind we call supply zone. Like I said earlier, supply is where we are looking to sell. So immediately price gets back into that supply zone, then we take our buy order. We follow the footprint of the institutions or the big boys. So this will now be our bearish order block. You can see the green candle that was formed before the bearish move. Now when you want to draw your order block, what you do is that you consider the whole body and the wick. That is why you can see that I put the line here on the wick, on the upper wick, and also on the lower wick of the last green candle that was formed. This is what we call the order block. That is why other traders will also name the whole area as an order block, supply zone, point of interest, or area of interest, meaning we are waiting here to take a sell. So immediately if this happens, price broke a structure and then price moves back in a compression movement back into that zone, then we take our sell from this point. So that is that for the bearish order block. We are done with the bullish order block, we are done with the bearish order block. This is just a representation. So let's move to the chart and see if we can get something like this and see how price reacted in that zones. First, let's look at what a bullish order block is on a real chart. So this is gold on daily time frame, and you can see that price is moving up. Price is moving in an uptrend for some time now, and we've been able to identify our bullish order block here. And like I said, the last sell candle that was formed before the explosive move that has broken a structure is what we term as what our bullish order block. So when you look at this side, you can see that this is our bullish order block. Let me use the line for you to see. So this is the bullish order block. So when you want to draw the bullish order block, you consider the body and the wick. So we start from this point, the high, and then the low around this area. So this is now our bullish order block, and you can see that this has broken a structure. The explosive move upwards this way has broken a structure at this point. Now when this break of structure happens, it usually happens when the candle breaks with a body, not a wick. So when the candle breaks with a wick, we don't consider it as a break of structure. That is just another secret I've revealed. I'll also be teaching that separately anyway. Then once we are able to draw the bullish order block, what are we going to do? We are going to wait for price to move in a compression movement back into this zone, then we take our buy order. So this zone will now become our demand zone. Like I said, others will also say bullish order block. So this will now become our demand zone. Our demand zone is where we are waiting to take a buy, follow the footprint of the big boy. So this is our demand zone, and then we also have our bullish order block. So this is now our bullish order block, the red candle, sorry, the black candle. I was talking about red, the black candle. When I drew the representation, what represented this earlier, I used the red. So here, this is the bullish order block, the red candle. So we consider it. This is our demand zone, point of interest, or AOI. Like I said, other people will also say this is our bullish order block. Now look at the movement of price in a compression movement back into that zone. So you see what is happening here. Waiting for price, wait patiently for price to get into that zone, then you take your buy from there. In between, you can still see a lot of demand zones. That is when you move to the lower time frame. Now for this one, I want you to see it clearly and understand what I mean. So we have to do it on a daily time frame for you to understand it clearly. So you see what is happening around here. You can see that price is moving nicely in a compression movement. We are patiently waiting for our zone to get mitigated. You see, immediately the zone got mitigated, then the second order was taken. The second buy order is taken. So this is where we'll be waiting with our orders. Once price mitigates that zone, then we take our buy order. So that is that for the bullish order block. Now let's move to the bearish order block. This is USD card on the 4-hour time frame. What are we looking at? We are looking at drawing our bearish order block because we are done with the bullish order block. And the bearish order block is the last candle that was formed before the explosive move to the downside, causing a break of structure. Now, how do we draw it? We draw the order block. We draw the order block by considering both the body and the wick. So this is our bearish order block. We consider both the wick and the body. And what are we going to wait for? We wait for price to move in a compression movement back into that zone. Then we take our sell order. We follow the footprint of the big boys. And when you look here, you can see that price has broken a structure nicely because of the explosive movement of price. You can see that price has broken structure here nicely. Like I said, when you are looking at a break of structure, you make sure the candle that has broken a structure has broken and closed with a body. So you can see that price has broken here and closed with a body. Now this is our bearish order block. So we wait for price to get there into our supply zone for us to take a sell. So this will now be our supply zone or point of interest. Supply zone or point of interest, the same place where we put our limit orders. Now look at what is going to happen here. You can see that price is moving nicely. Price has moved nicely in a compression movement back into that supply zone, and then we have the 4 again. So this is the second order. This is the first order from the big boys, and this is the second order. Now we don't care about when the first order is being taken. Ours is to make sure that we are able to identify that this is the first order. We draw our order block, whether bearish or bullish. Then we wait for price to mitigate that zone, and we take our next order by following them. This has brought us again to the end of another episode. Now, if you are not part of my Telegram channel, I'll leave the link in the description below. Join the Telegram channel and learn more. I also give signals out as well. You can also join and take my signals and make money for yourself. Do well to hit the like button, hit the subscribe button, and also leave a comment below. Any topic you want me to treat or talk about, leave it in the comment section. I'll do my best to treat that topic. I love to read comments as well. Thank you, and see you in the next video.